Welcome everybody to another one of my trader cafes from wherever you are in the world. This is a show where we interview people from the world of trading to help learn what motivates them and really to try and find out a little bit more about where their edge comes from. So during this season, we're going to be talking to traders, to market observers, and to market analysts as well too, to try and bring you insights as to how to go about improving your trading edge. So firstly, a quick note on the prize on offer today. I've managed to persuade Paul again to give away 2 weeks of access to my broadcast group to a lucky listener who's going to be drawn at the end of the show. So stay with us and enjoy the conversation. So our guest today is Alexis Ho. Alexis is based in Singapore and has been with Actions to Wealth as a trader for quite some time. She's a good friend of mine, and I really appreciate the disciplined and focused way that she applies fundamentals to her trading edge. So welcome, Alexis. And for the benefit of our listeners, can I start with asking you how you got into trading?
Yeah, sure. Well, I think the curious thing is I actually graduated in finance, so I had an awareness of trading from a young age, I would say. Worked in a banking institution for a couple of years, and of course, seeing the amount of money that goes into trading made me, want to do the same thing. Because who doesn't love money, right? Um, yeah. Sorry, can you guys hear me?
Yep, perfect.
Okay. All
Perfect
right.
now.
So that's how I got interested in it, and I spent many years actually thinking that I could get better or get good at trading by doing research, textbooks, and basically I was trying to study trading. The way I got through the university, right? But then that didn't work out until I decided to find myself a teacher, what you guys call a trading mentor, and that was how I met Paul, and that was actually the turning point of actually succeeding in whatever I was trying for the past couple of years.
Well, that's good.
Yes, so finally.
Yeah, look, I think I tend to agree with you. Actually, I think that there's so for me personally, having somebody to look up to and respect. I've had a few trading mentors in my time, and there's a couple of people even now that I've followed for like 20 or 30 years that I really respect in the trading industry. So it's a very interesting one actually, because I think you can learn something from books, but until you really to try and shortcut things, and that's the key thing, right? To try and shortcut things, you need to have that sort of personal element of it, and it's really hard to explain to some people that you can sort of read a manual and it doesn't really give you the flavor of what you need. But having somebody to encourage you, somebody who's sort of behind the scenes, if you like, trying to provide you with some guidance is really useful, I think. And so in terms of your thought process, so you're a fundamental trader. Is that the right description of how I should put it? Because I love the way that you study the fundamentals when we look at the TTR show every week.
I think I started off being a fundamental trader because I came from literally a school of thought where I could study my way and get better at things. So I did a lot of studying earlier, and that was and I do enjoy the reading up. But I think ever since I've met Paul, I've become a lot more lazy in that I do a little less studying, but I trade a lot more technically, which actually kind of works better. So the fundamental is the leisure part, which I do enjoy because I think it's just interesting in terms of seeing what's going on. But I rely a lot more on technical analysis, and the fundamentals now just give me a bias, a medium to long directional bias. But the actual discipline of taking entries comes from the technical side. So I guess I could be a fundamental slash technical, I guess, a mix, I guess.
Oh, hybrid.
A
That's
hybrid, or
okay. Look,
I
I
prefer to call
think
it a lazy trader.
no, let's not. I don't think there's any such thing, is there? Maybe there is a lazy trader out there, but I don't really know. I haven't really met many, to be honest with you. So, because it was interesting, so the first part of my career, trading career, I sort of did the same. So I had an economics background. I had the benefit of spending 3 or 4 years in university trying to understand how the world worked from an economics point of view, and I tried to apply that to trading and found out very quickly it wasn't quite the thing for me. It's sort of useful. It means I can understand a lot of things really quickly, but I'm not sure it points you in the right direction in terms of the way in which you try and understand market price action, and maybe that's what the technicals adds to it, right?
Yeah.
Yeah. So from so then, if you were going to try and describe your trading edge, that hybrid structure, do you think that that has come about because it suits your personality to have that type of structure of the hybrid approach? So maybe I'll rephrase the question. So having that fundamental and the technical element, do you think that that's really important for your trading in terms of the roundness of it all?
Yes, definitely, because I think there is really a lot of information about trading strategies, and there's so many ways to trade a market. There's trend trading, range trading, breakouts, and scalping, and there's so many, right? So I think it really is important to find something that fit what a person is most comfortable with.
Yeah.
So that, I think, was how it more or less formulated my style over the years with Paul, especially. And I realized certain, I would say, uh, OCD in parts about myself that makes me the trader I am. So I do enjoy trading on the hourly time frame because I can be a little bit impatient. So I'm not one to sit around to wait for stuff. So the H1 actually suits me a lot better, where there is more opportunity, yes, but I don't have to wait a whole day to see the entry get taken in. The fundamentals keep me a little bit more grounded, and let me know that, okay, if I follow the fundamental bias, I don't have to exit so early, or I don't have to worry about rushing into a entry. So I guess the fundamental side gives me the bigger picture view, and that allows me to um, help myself be a little bit more patient instead of chasing after entries or exiting too early. Yeah.
So do you when you're thinking about that, because trading short term time frames, obviously, figures are really important, right? So numbers when they come out are really important. So is that a key focus for you during the week, and how do you sort of like, maybe you give people insights how you prepare for that and have a think about what you're going to do when those, say, something like non-farm payrolls come out?
Well, I think over time, when we always tell beginner traders to avoid trading during the news like that, but it is also true that it is news like this that gives you that pop, especially on the shorter time frame, that takes your trades into the 1 times 10 and the 1 times 8 or even more. And how I've evolved over the years is having the fundamental bias allows me to position myself with a higher probability direction. And also, as long as I keep my stop losses a little bit further than usual, I usually can survive the long tails that appear. So that kind of helps me be a little bit more prepared. As in, you read the news or you read the fundamentals, you see the statistics, you kind of know in general which currency pair is stronger or weaker, etc. And you just
Yeah.
position yourself, with the right risk management, and wait for it to pop. So if it goes, it goes. If it doesn't, wait for the next one.
Yeah, look,
Yeah.
I can understand that, and from my perspective, I think uh, I've I've traded quite a few time frames in my career, but I think as I'm getting a little bit less young, I'm going to leave it like that. I tend to get a little bit longer in my time frame, so I look at maybe 4 hourly charts and maybe daily charts. So when I'm thinking about positions, but I'm thinking about exactly the same way that you are, right? So there's not really I don't think a change in sort of like the style, if you like. So in our thinking process, what it is maybe just a change in our personality that suits some people, like really suit the very short term, and how they do that. And I've met many traders who are incredibly successful trading relatively short term, and it's something that I wouldn't say I've struggled with, but it's something that I don't have. It doesn't suit my personality as well. And for me, I'm actually really comfortable in my one. So my average hold is about 2.5 days. and I quite like that. Some days will go on for a very long time. I hold a trade for a while. Those of you that know me and my coffee trade, it's like that's not skewing the average a little bit. You maybe moves my median slightly, but the key thing for me is that the idea is sound, and if the idea is sound, and then I'll hold it for a few days. But I do like to get out of things if I can show a quick profit as well too. I have as I'm sure you do, because you apply that on the hourly chart, right? You have a look like a show me the money. I always love Tom Cruise movies, and so there's a show me the money element to this, isn't there? Where you say, actually, I get really impatient. Why isn't the market doing what it wants? My setup's right. I'm ready. It's not breaking yet. I can see it's going to break and it's going to go my way, but you just don't get into that. Sometimes it just doesn't happen on you, right? Then you get really frustrated, and you go, okay, let's just call it a day. I'll get rid of that. Not that it inevitably then moves, because it doesn't do that very often, but I have a very much a attitude that if I've got this right, it should go straight away and should go quick and fast, in the same way that you do as well too, right? But I think that's just a different time frame approach, but the style is very similar, right? I'm sure trading hours, you must be impatient. And is there a way in which you could, so if you were looking to help somebody, right? If they were going to start out in this, and what would you say to somebody who was trying to trade the hourly time frames in broad terms to try and develop an edge? Would you go for range trading? Would you try breakouts? What would be the thought about how you go about that?
I think if someone was to try trading on a shorter time frame like the H1, I would recommend pick pick a market opening time. What I mean is, try to fit your trading life into, for example, the Aussie Asian opening in the morning, the Euro Pound opening in the afternoon, or the US opening at night, because the middle parts on the H1, the candles don't really do much. It's only into like the hour leading into the market opening and the hour after you get that movement and that directional confirmation of the movement. So it's easier if you just look at the market at the same time every day, just prior to market opening, because then it will kind of help you get that itch away, of the waiting itch away, because you put the entry in, it's going to happen in about an hour or two instead of waiting for half a day. Yeah, so pick a time frame. I would say pick an opening that fits your life, and then just look at it every day, and that should help you scratch that itch.
And there's the contrast between you and me. I've spent the last 2 hours doing my pre-week work, looking at the currency pairs I want to focus on for this week, and also sort of having a scoot round about what's been happening, and just to remind myself of what's happening on a Sunday, because I'll try and pick it up sometime on Monday morning, and then move on from there. I love to catch the open on a Monday, because that's when crazy things happen. But realistically for me, I go, okay, well, that's interesting, and I'll see how that trades for the balance of the next 3 days, and see about trying to get some positions on. Same idea, like I said earlier, same idea, but just a slightly different time frame. And that suits my personalities. I think it probably does yours as well too. So, do you have like from a technical standpoint, do you have some favorites? So favorite setups, are you a price action, or do you have some indicators that you like to use to try and give you those, your trading edge?
I think the easiest one for me now is what we actually teach to some of our new traders. It's the hourly wave rider. And I trade it slightly discretionary, because I've been at it for a while. And what I do like is, I think for traders who are unfamiliar with the strategy, it's called a intraday cyclicity, because it really is trading the shorter frame cyclicity, where it's a very simple higher high, higher low concept. And at the Actions to Wealth OTB team, we actually have indicators that help to identify the cyclicity. So it's really just trading the intraday cyclicities on the H1, that would probably describe the my favorite trading style for now.
Okay, so just to help some of the listeners out, is that so that cyclicity is, I guess, just the distance between the highs and the lows and the direction that it's taking. Is that what you're referring to?
Yes, correct.
Okay, okay, that's cool. Any other ones that you look at, or that you want to tell us about?
Well, I do like to I do like to wait for the turning points on the bigger time frames. and try to catch it off those nice horizontal levels. So I would say reversal. I'm not sure. I'm not sure if Paul will be too pleased to hear this, but I do a little. I do like the reversals as well.
Look, I think one of the great things, and I'm sure Paul will be the first one to say it, is this is an education process, an education show. So, part of the journey about being a better trader is to really analyze the way in which you're doing things, right? And if there's some edges and some opportunities out there that you've had a chance to have a look at and maybe done some back testing on to try and get a feel for whether they're right or not, then that's there's absolutely nothing wrong with that. So, when you come to, so you mentioned that. So do you then, when you think about the way in which you trade, do you back test the trading systems before you get going? Do you keep a sort of a close eye on those things to see how things are performing?
I think backtesting is really very important, not just for the strategy that we trade, but also the psychology that you start to build. Because it's literally like a statistical system where you take number of trades. There's a number of wins, there's a number of losses, and then there's the risk versus reward. So it really is about not just trading the technical aspect of it in terms of identifying the trade, but also the psychology part where if you take one trade it loses, two trade it loses, the third trade it still loses. Are you able to continue taking the fourth trade, the fifth trade, the sixth trade until you get your 1:10 and it covers all your losses? So that comes from conviction, which I think again the belief that the strategy works, and how to get that belief is really back testing. And of course, I do a little bit of forward testing as well with very small risk, just to start to get the momentum for things that are, especially if I'm trying like new stuff, especially. So back testing
Okay.
is really important.
Yeah, look, I think that mental element of this is probably understated. We were talking to Lloyd last week, and he said for him it was really important. He leaned a lot on that, right? So, and this is the second time I've heard this in as many weeks. So the back testing, when you think about it, it gives you confidence, right? And that can lead to better trading. So that seems, when you do it, it sort of seems, when you speak to traders when they're starting out, I guess the point would be with all of this is you say, well, look, you might not want to back test because somebody's just sort of given you a basic trading system. But when things go wrong, you've got to have the knowledge to manage all the way through that, right? Because there's nothing, everybody can trade well. When things are going right, it's pretty straightforward and life is good, right? There is nothing wrong with the world, right? And you're happy to get up at 5 o'clock in the morning and do some trading research, right? When things are not going well, that's when things always get difficult. And I think traders always have bad runs, right? Just a fact of life, right? That there's going to be opportune times when the market simply will not work for you, and actually having that confidence, right? Knowing that, okay, look, the average number of losers I have on my system when it goes wrong, consecutive losers, is 3 or 4, whatever that number is, right? And then it normally turns around, max number of losers is 6. I've never had more than 6 before. So here I am sitting at 5. What do I do? Right? And I think from a trader point of view, in terms of the confidence it gives you and the amount of risk that you can take, if you've been reducing risk as you have more losses, which sort of, I guess, from a risk management point of view is, maybe we'll cover that in a second, but that seems, a relatively logical way to doing it, the anti-martingale approach, right? Then the question is, do you need to change that strategy when when the system gets to what you might consider the at max or near max loss making run, right? So, and some of this is about, to your point about cycles, right? Some of this is about the cycle of the system, and everything has, and markets have a rhythm to them, and sometimes when the rhythm is out for your trading style, which can happen across many markets or a period of time or whatever reason, right? It just happens. Sometimes it's you, but usually there's something else going on, right? It's really important to have that as a backup. And actually, what I often do is I go back and I look at the system performance, right? And I say, okay, right, max losers was 3, 4, 5, 6, whatever they are. Right, okay, if that's the max loser, here I am sitting at 2. I'm going to change my trading style and I can be more aggressive then. Is that something that you've thought about doing, in terms of the way in which, because obviously that back testing gives you the confidence, but have you thought about taking it that stage further where you think about, oh, I wonder how I can manage that from an account perspective?
Yeah, I think that's really true, and I think that is the part where I guess having a trading buddy helps. If and that's where the trading mentor actually helps. Where I think a couple of in a bad run, I think the best trader would have a moment of self doubt in, okay, something's wrong either with me or the system,
Mm.
and I think that's where your trading buddy is there for you to have a chat. Hey, how's your trading? What's happening? What's happening to the market? I think it's just a way of getting some additional insight into things that you're seeing on the charts. And of course, in terms of encouragement, that's what your mentor is for. And I think that during the COVID period, I think that was something that I had Lloyd, because Lloyd is kind of like my trading buddy. We're on text pretty often. Um, and I think during COVID, I had a bad run in the beginning because I spent too much time on charts because I had so much time at home. Yeah, and I think it really was about just checking in. And then I think it was through one of the conversations I had with him when I realized actually the adjustment that I had to make was just to push my stop losses a little bit further, because due to the market volatility that increased during COVID, the markets got choppier. So it was nothing wrong with the system. It was just that my stop losses, following the older system where markets were a little bit smoother, were a bit too close. So I get stopped out. I get stopped out and then it goes, stopped out, it goes. So all had to do was just shift my stop losses until the markets smoothen out a bit. So I think it was then I identified that the choppiness of the market and adjusted accordingly as well.
And look, I think you touched on two things there, right? Which is really important. So let's start with the trading buddy, right? So there used to be I remember I used to sit in trading rooms, right? And so the opportunity to talk with people, and we would do this at lunchtime, right? I'd sit there with our friends and we'd choose a random market with the other guys on the trading desk. We'd choose a random market and we'd go through it, and we'd say, oh, this is wheat today. Okay, how does wheat trade? And you look at the way that the prices are structured. I'm a price action guy, right? So we look at the way the prices are structured, and we try and go away and predict what's going to happen next, right? And so you try and you look at it and say, well, I can see that's going to happen, and this is going to happen, and you try and make those calls, right? But what happens is you learn a huge amount from having a friend in trading. Now, these days we're all virtual. COVID is stopping us from traveling and going to see overseas friends of ours. So it's almost really important within the trading community, especially and everywhere has it. The Actions to Wealth team has it as well too, because there's a lot of outreach that you guys that the listeners can do. If you're part of the crew, right, you can ask questions and people respond to them and talk to you about it. And there's so many great ways in which the coaches help out, right? But it's really important to try and find somebody to talk to about what's going on. There's actually a lot of two-way interaction, and it might not today help your trading style or what you're doing or improve your edge. But actually, if you go back and say a little increment every week, and then you look back over 6 months, you go, actually, I think I've really learned something here. This has been really valuable for me, because I'm bouncing ideas off people, and you sort of naturally say, oh, I wonder what are you looking at, right? And that helps you focus, doesn't it? And the way in which, so for me, trading buddy is a really important principle, and I'd recommend it to anybody. And by the sound of things, you like that as well too, and you really support that. The second thing I'd like to I'd like to comment on is moving stop losses, right? So this is a volatility based discussion, okay, isn't it? So it's like saying, well, hang on, what's the market state that I'm dealing with? And so when you thought about moving those stop losses and did that, was that what research did you do to come up with that? I know you were chatting, right? But was there to get to that point? Did you notice that, say, the average true range was getting bigger or something like that?
I think it was through one of the conversations I had with Lloyd, and then and we went through the charts, and I realized, hey, actually, the candles are bigger, and it's just like it's as simple as going out to the daily and looking at the visual bars. The daily bars have gotten bigger, the 4 hourly bars have gotten bigger, so it makes sense that it's the same things happening on the H1. Yeah, and that was when I actually shifted my stop losses to swing highs and swing lows instead of where it was in the previous strategy. So yeah, and it was really obvious because I think the moment the idea hit, what Lloyd and myself did was we actually just went through the charts, and you could see a very distinct small bar, small bar, small bar, and then suddenly the period changed and everything was big and fat.
Yeah,
So
yeah.
it was quite cool that way.
Yeah, so I completely agree. And actually, one of the things I look at is the implied volatility on in the market as well too around the options, because that gives you some clues. Sometimes that starts to pick up, and you compare that to the historic vol, and you can see those differences, right, in terms of where that's working and what the market's thinking about what the changes are. And the volatility adjustments often occur because there's a reason, right? And usually that means that somebody's in the market doing something big, and you need to be part of that journey, because they will eventually, probably end up with the market going in their direction, right? I'm thinking of case in point over 2019, 2020 was a central bank buying of gold, right? A specific day, no, it didn't make a difference, but they contributed to the vol quite a lot, I think, in gold. And that drove, unsurprisingly, the gold market went up because there was a major player who was investing in it. Now, I don't think those central banks have sold any gold, and gold has come back a little bit. I think they just lifted they just cancelled all their buy orders, and so the market's drifted down again. So it'd be interesting to see what they do next. But I think one of the key things about all of this is to recognise that volatility change is really important for the way in which you have to manage your trades. Being stuck saying no, I always give this 25 ticks or 25 pips, depending on how you measure them, is almost too restrictive, right? These days, you've got to think about what's going on, because the market seems to move very quickly from one state to the other, and then stay sustained in that new space, right? So so theme wise, what are the key themes that you're thinking about at the moment?
Well, I think my key themes that I'm thinking about now comes from a fundamental play. So what I've done over the previous REITs is really the bond market versus interest rates, and also a little bit on unemployment. So when we actually look back on the charts, I realized something quite interesting, and I'll probably share that in the later session on Sunday, is that there is a lot of talk now about the Fed increasing interest rates. But will they actually do it, or are they not going to do it? I think this is the talk that a lot of people are having. And I think I
Yep.
might have found a hint, or something, that how do I see that? How do we see the possibility that might get closer? I think it's tied in to a combination of unemployment and inflation. And when we look at the unemployment figures, and the interest rate figures as well, comparatively with the slight overlay of bond chart, you can actually see that unemployment has a factor in it, where the Fed will actually say, okay, I'm comfortable with the unemployment numbers now. It is time to increase the interest rate. So I think that I'm onto something. So I'm hunting it down right now, but I think that will keep me a little bit closer to when the Fed will actually start to pop up the interest rates. Yeah.
Yeah, I think I I agree. I think it's a really it's the key question, right? That's out there in the market at the moment about real interest rates and nominal interest rates, and what that all means for Fed actions, right? Um, Hey, I'm really conscious of time, so before we get on to rapid fire, Mai, if you're there, would you mind spinning the wheel of fortune to see if we can have our prize winner for this week, please? I love this. This is just awesome.
Yeah. Why is my name or not on it?
Okay, now I'm going to get that spelling, that pronunciation wrong. It looks like
Subra.
Subla. Okay,
Subra Money Velan.
thank you. That's let's go with
Yeah.
that. Congratulations! You're going to win a couple of weeks access to my broadcast group, and congratulations for that, and hopefully you'll enjoy that opportunity. So just to remind everybody, so I have a broadcast group, and also have a trading group where I do private mentoring to a very small team of traders who we meet once a week. And it's something, I keep it nice and small, 3, 4, 5 people. I do not want to increase that, just because we can get a lot more done with that number of people, and it's quite an intense hour session that we do every week, but it's there to try and improve your trading. And for those of you that are interested, please obviously contact the guys at Action to Wealth, and they'll be able to help you out with that. So, rapid fire questions. Are you ready?
Yes.
Okay. Right. Here we go. So, which trader has most influenced your trading?
Well, I think you.
Oh, okay.
Yeah.
Thank you. I appreciate that. Let's just move on. What is one attribute that every trader should have?
An open mind.
Oh, I like that. Yes. Favorite indicator in trading?
I have none. I no favorite indicator. I like what works best at the time.
Okay.
It's Lloyd's fault actually. Every time I talk to him, he gives me something new to try. So I blame it on Lloyd.
Nice. So Joe Biden, savior or caretaker?
Caretaker.
I think that's the consensus these days. So crystal ball time. What price level for Bitcoin in a year's time?
Wow, I have no idea, but I think 100,000. It looks good from what Shukri is saying.
Okay. And last question then is in a speed eating food contest, what food would you choose?
Spaghetti.
Spaghetti.
Yes.
Interesting. 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 Okay. All right. Thank you. Look, thanks, Alexis. And folks, look, that's all we have time for this week. I'm again looking forward to for those of you that won the broadcast group. Then obviously with trade calls for the next couple of weeks, and enjoy it. And to everybody who's out there, if you have been, thank you very much for listening. And it's I guess over to Paul and the TTR show in a few minutes. Thank you, folks. Thanks you, Alexis, and
Thank you.
we'll see everybody again soon.
Cheers.